Today, I want to share with you what I believe are huge catalysts for Tesla stocks related to manufacturing, which I believe will have an impact on Tesla earnings within the next 1 to 2 years. And you guessed it, this is about the opening of the two new Giga Factories. There's Giga Berlin and Giga Austin. I want to share why you as Tesla investors and Tesla fans should be excited for it. And as bonus content for those of you who stay till the end, I want to share a third catalyst that you should also watch out for. Hey Bulls and Bears, Steven here. I want to share some exciting news for you Tesla investors and Tesla fans. I believe that the opening of the two new Giga Factories is exciting news not only because it allows for manufacturing to further ramp up for current models, especially the popular models such as the Tesla Model 3 and the Tesla Model Y, which are selling like hotcakes. But it also allows the company to get ready to introduce new models in the future, such as Tesla's Cybertruck and Tesla's Semi. As always, this video is not investment or financial advice. I just want to share some exciting news about Tesla that I came across and I think you should be aware of as well. As to how this will affect or not affect your portfolio and investments, and if you should buy or sell these stocks, well, that's a question that only you can answer after doing your own research. With that said, let's dive right in. Some of you guys might say that Tesla is already valued more than any other car manufacturer out there and that the price of Tesla shares has already priced in for all its growth. I agree that it may seem to be overvalued if we use traditional metrics for evaluating a company and its stocks. On the other hand, if you're a growth investor, from my perspective, looking at traditional metrics for evaluating a company, we may lose out on a lot of opportunities to invest in some fast-growing companies, which you cannot see from looking at just these financial metrics. What I consider for evaluating growth stocks, and Tesla is definitely one of these cases, is that we can't just use traditional metrics for analyzing stocks. So it can't just be looking at items such as cash flow or price to earnings ratio, for instance. Rather, as a growth stock investor, I believe that we need to understand the full potential of the company, and we need to convince ourselves as investors that the companies will grow into these valuations and beyond before we invest our money in. With massive increase in sales potential coming up, or that's what I think, from the openings of the two new Giga Factories as just actually one of several catalysts, I believe that the earnings per share of Tesla stock will increase dramatically, bringing the stock multiples down. Of course, I also believe that looking at the company's financials and the numbers that are available publicly is only one aspect of understanding the potential growth of a company. There's so many different factors that we have to take into consideration to make sure that the financials and these numbers are showing the whole picture. But that's another topic for another video. With that said, let's check out why I believe that the opening of the two Giga Factories are a huge catalyst for Tesla stocks, and why you should be aware of this news and consider what this means for your investment. Right now, we see that Tesla products is supply constrained, and there's a lot of demand for these products, especially its automotive division. So the current sales is limited by production rate. The production rate is mainly limited by the rate at which the manufacturing plants can turn out these vehicles. And to a certain extent, chip shortages as well as battery cell shortages also plays into the rate of production. But overall, the rate of production is limited by the rate at which vehicles can be turned out. If Tesla can increase the rate of manufacturing, that would also mean that they can increase the rate at which the vehicles could be delivered to the customers, and that's when the customers will pay for the vehicle, hence increasing the rate at which sales transactions would be made. Increased sales would also mean increased profit. Since now Tesla is a profitable company and actually more profitable than all other car manufacturers out there, this is not only increase in gross profit, but also an increase in net profit, which is awesome. This increase in Tesla's net profit will also increase the earnings per share of Tesla stock. If you believe in Tesla's growth potential and that the current valuation of Tesla stocks are correct, and of course these are huge assumptions, then the increase in the profit, especially the net profit, will make Tesla undervalued if the price of the stock remains the same and you believe in the continued growth of Tesla in the long term. So what would happen to the stock? Well, of course, there's no guarantees, but if this happens, then it is likely that the price of Tesla stock will increase to maintain the same stock multiples over time. This is if we believe that the growth of the company will continue at this rapid pace. And these are the main reasons why I believe that the increase in manufacturing capacity for the Tesla Giga Factories will help increase the value of their stock. But don't take my word for it that Tesla is a fast-growing company and that Giga Factories is going to help bring up their stock. I want to show you why exactly I think it will work out this way and let the numbers speak for itself. Remember that Tesla is supply constrained and that there's a lot of demand. Let's now take a look at their website to see what the current wait times are for a typical customer based in the United States. For the Model S, we're looking at anywhere between 2 to 5 months, depending on if you're buying the normal Tesla Model S or the Model S Plaid, which I don't have money for either one. Now for the Tesla Model 3, we're looking anywhere between 2 to 4 months. Again, we're seeing that the popular models, the base and the long-range versions of the Tesla Model 3, we're looking at 2 to 4 months roughly. If you want to upgrade to the performance variant, it's about 2 to 3 months, slightly shorter than the other two variants. Taking a look at the Tesla Model X, we see that the normal Model X, we're looking at a wait time between 9 to 12 months. Whew, that's a long time. If you have the money to upgrade to the Plaid, then it looks like it's about 4 to 6 months, which is a little better. Onto the popular Tesla Model Y, we're looking at about 6 to 9 months for the Model Y long range. Oh my goodness, that is a long time. The Tesla Model Y performance looks like it's about 2 to 3 months if you're into that kind of stuff. This data here is based off of a customer based in the United States, and we definitely see a lot of demand and there's just not enough supply to feed into that demand. I browsed around online and I saw that some people overseas especially are reporting over 10 months wait for the Tesla Model Y, which is so unfortunate. Dude, I'm sorry guys. So based on these wait times, it's easy to see that the availability of Tesla vehicle is the bottleneck in the growth of the company. Alright, enough of this wait time shenanigan. Let's take a look at the supply side. Looking at the current production sites, we have the Fremont factory, which is the original Tesla car factory. It is assembling up to 500,000 Model 3s and Model Ys and another 100,000 Model S's and Model X's, and these are values production rate per year. We also have the second Gigafactory, which is the Giga Shanghai factory that opened up last year. Giga Shanghai produces Model 3s and Model Ys, and based on the most current production rates, we're seeing up to 470,000 vehicles produced each year. You guys might be asking, what about the factory in Nevada and in New York? Well, these factories are owned by Tesla or a subsidiary, but they do not manufacture full cars, although they do manufacture some car components such as the battery and the motor. They also manufacture other products related to the other aspects of Tesla business, such as for clean energy and battery storage. As we can see from the numbers, if Fremont is producing about 600,000 vehicles in a year and Giga Shanghai is also producing about 470,000 vehicles in a year and increasing, the current rate of production is about 1.07 million Teslas in a year. Let's just round this down to 1 million to be conservative. Let's remember that 1 million number in our heads for a moment and we'll understand why the introduction of the two new Gigafactories is a big deal. Now, it's time to take a look at the two new Gigafactories, which brings us to catalyst number 1, which is the opening of Giga Berlin, which is actually now open. So after years of hurdles, Tesla finally was able to receive the official building permit, and this is great news for investors and Tesla fans, especially considering all the delays in approvals. Just recently, on March 22nd, Elon Musk himself flew to Berlin to deliver the very first vehicle, which is Model Y. And man, does Elon Musk look excited. Taking a look at the manufacturing rates at Giga Berlin, we're expecting at least 500,000 vehicles produced at Giga Berlin each year. Now let's take a look at the second catalyst, which is the opening of Giga Austin, which is slated for April 7th, which is coming up real soon. What I believe makes Giga Austin special is that unlike the Model Ys built at launch at Giga Berlin, which are based off of the 2170 cell batteries, the rumor has it that the Model Ys at Giga Austin are going to be using the 4680 cell batteries, but it hasn't been confirmed yet if the initial vehicles built there will use the new cell batteries, so stay tuned. The use of the 4680 cell batteries is exciting news not only because of the increased performance of the new cells, although some people may argue otherwise, we won't get into that right now, but the cost reduction of producing the 4680 cell batteries means more profit for the company, and you know what that means for investors. As a whole, just like with the other gigafactories, we're expecting a manufacturing capacity of over 500,000 vehicles produced at Giga Austin every year. If we add up the 500,000 annual production capacity at Giga Austin, combine that with the 500,000 from Giga Berlin, that yields an additional 1 million vehicles produced a year. That increase of 1 million vehicles produced annually is a huge increase in production volume from the 1 million vehicle per year from Fremont and Shanghai that we calculated a few minutes ago. This brings an annual production rate of over 2 million vehicles, which is doubling the current production rates. If you're enjoying this video so far, it will help me so much if you can give this video a like to help the YouTube algorithm know that you like this video so that we can share this information with more investors and fans. But with that said, let's take a look at why I personally think that the potential increase in sales due to manufacturing output is great for Tesla investors. Of course, this is just my opinion, so please do your own research and decide what this might mean for your investments. Let's take a look at the earnings per share of Tesla stocks, which currently stands at 180 to about 200 at the time of recording, which seems high, especially if you compare to legacy auto manufacturers such as GM and Toyota, which have PE ratios in the single digits or low double digits. But if you believe in the growth of Tesla, then this number might be reasonable for you, especially given the PE ratio compression that we saw in the past few years, which has only accelerated in the last 1 to 2 years. Just over a year ago, we're seeing a PE ratio of over 1300, which has dropped to the 180 to 200 range. If Tesla can double the number of vehicles they deliver in the next 1 to 2 years because of the opening of Giga Berlin and Giga Austin, this catalyst alone, with all else being equal, would automatically cut the PE ratio in half to just over 90. Sure, a PE ratio of over 90 is still very high, but let's remember that the catalysts covered here are just for the opening of the manufacturing plants and does not even include any of the other improvements such as increasing manufacturing efficiencies or even increasing the price of their own products, which we saw recently more than once actually. Even with the increased pricing, they're still selling like hotcakes, which is a testament for just how much demand there is for these vehicles. On top of all this, we're only looking at the growth of Tesla as an electric vehicle manufacturer and not considering the growth of other parts of the Tesla company, which includes solar energy and full self-driving. And these are all additional revenue streams that we have not considered. Whew, this is a lot of information, but this is super exciting news nonetheless to know that Tesla is doing so well. Thanks for making it so far in this video, and as a bonus, as promised, I'm going to share one more bonus content. Based on a recent article from Electric, Giga Shanghai output holds an incredible pace, on track for outputting over 600,000 electric vehicles per year. With some upcoming improvements that's in the rumors, Giga Shanghai could even crank out over 1 million vehicles in a year. Hold on, let's wait for this. In addition, there are also rumors that a second factory in China are in the plans that may be close to the current site for Giga Shanghai, which may double the production output of Giga Shanghai to 2 million vehicles a year. If Giga Shanghai does reach a production output of 2 million units per year, and this is still a huge if, but if this does happen, this represents a huge increase over the production output, even considering Giga Berlin and Giga Austin. Taking a closer look at these numbers, as we calculated earlier from the 2 current gigafactories, combining those with that of Giga Berlin and Giga Austin will yield 2 million vehicles in a year. If the improvements at the second factory at Giga Shanghai can increase the production level at Giga Shanghai from 500,000 vehicles a year to 2 million vehicles in a year, then that would bring the total output of all the Gigafactories to 3.5 million units per year. Let's do a little calculation here. We have the 2 million units from the 4 Gigafactories plus the 1.5 million from improvements and expansion of Giga Shanghai. That yields 3 million vehicles in a year. If Tesla is able to increase the production rate from the 2 million per year to the 3.5 million a year, this represents a 75% increase in production rate just from the improvements and adding a second factory in Giga Shanghai. Of course, these are still rumors, so do your own research and don't just run out and buy a bunch of Tesla stocks right now without doing your own homework. This is still super exciting news nonetheless. In any kind of investment, there's the good news, but there's also the sucky news. So don't forget to consider the risk, which includes short-term chip constraints, increase in prices of raw material, long-term battery constraints, and of course we have this crazy inflation that's going on and the uncertainty in geopolitical tensions as well. Do your own research and decide for you what this information might mean for your investment and trades. Thank you so much for watching this video, and I hope you found value in the information I shared here. If you haven't already hit the like button, please take a second to let me know and the YouTube algorithm know that you enjoyed this video. And don't forget to subscribe to this channel for more content just like this. Hope to see you in the next video.